Alright, traders. Got ourselves a pretty interesting market since we last did the update on Monday. Had some big extensions, some big sort of leaks coming out of the US in terms of the tax plan, and some big moves in both dollar, yen, euro, and Canadian dollar. You know, they're the main ones. US stocks as well. Generally, stock markets are really strong. We'll go over what's going on. To begin with, though, just want to get out of one of these trades here, the Kiwi yen. A little concerned about the Kiwi dollar. We'll go over why it's falling later. But the Kiwi yen, I just don't want to have too much yen exposure going into tonight. The yen is moving high with US yields. So dollar yen is moving high with US yields. Now remember, you know, US is raising rates. Eurozone is coming out of QE and potentially be raising rates next year, tapering at the very least. And Japan's pretty much got rates staying the same. So any move in yields in Europe is best expressed against the Japanese yen because the yields are staying the same. If the yields are increasing in Europe and increasing in America, then the result is net not much. Yesterday, you know, the yields were increasing in Europe a bit more than in America, and that was a big story, you know, why the euro is rallying up and showing so much strength. The market was sort of forcing the ECB's hand here a little bit, getting front-running sort of perceived changes that are coming in rhetoric and tone and from the ECB sooner rather than later. Now, while this meeting here we've talked about last week, it's this week on Thursday. There's another meeting for ECB. Is unlikely to be the key meeting where they change their wording, get people excited again about tapering, and the yields start to increase dramatically. It's still, you know, yields can only go one way from here, sort of thing, with negative rates and that coming to an end. So that's why you're seeing these big moves in the yields. The market's starting to move now, and you know, if you're sort of long bonds in Europe, you're probably on the wrong side. If you're long bonds in the US, you're probably on the wrong side. And you know, that's why there's such a bubble in these markets that it's a dangerous game to be caught. Now, so that key level in the US 10-year is 2.3%, and we broke back above that on leaked details about Trump's tax plan coming. It's an interesting tax plan in the sense that it's as aggressive as the market wanted, yeah. But the problem is, right, you know, cutting the corporate tax rate from 39% down to 15% and putting a flat repatriation tax of 10% on overseas retained earnings, and having, you know, this something like 2.6 trillion or something to come back to the US, that has to be sort of funded. You know, that's a shortfall that has to be funded somehow. Now, Trump's attitude is, you know, the economy will grow so strongly, everything will take care of itself. But there's definitely going to be fiscal conservatives who are concerned about that dramatic cut in revenue for the government without a dramatic cut in spending by the government. Yeah, and so remember, Trump's also expanding the U.S. military. He also wants to build a huge wall. And some of this was supposed to be paid for by a border adjustment tax, right? Now, that border adjustment tax is supposedly being taken out of the tax plan and isn't part of it. So, you know, I can imagine here that the market's going to be very, you know, jubilant. And you know, you could see, you know, the reaction to the details that were leaked, that it likes it. You know, companies must love it. You know, this helps their earnings, of course, and the dividends and the profits. But you know, at the end of the day, is the bill going to pass? Right? Now, if the bill can't pass, then all of a sudden he hasn't got past his Obamacare repeal. He hasn't got past his tax plan. He's going to start to look very ineffective as a leader. He's also got issues at the moment just getting his government spending bill passed. He had to back down from the wall demands, and you know, that is the point where the market turns on Trump, and that's a very negative event for the US dollar, if that was to be the case, because without all this Trump spending and Trump, infrastructure spending and Trump tax plan for companies, there isn't much, room for the rally, which is backed on that to go higher. And there is, a couple of thousand points in the Dow on the back of his plan. So, there's you have to be concerned if the conversation goes from the tax plan to whether this plan can pass, and if it becomes another dead on arrival, sort of the feeling they had about his healthcare plans to repeal Obamacare, and as soon as the market turned on, as soon as everyone came to the conclusion that this is not going to pass, they were very negative. Now, if that same thing happens in 2 days from now about Trump's tax plan, then the market's going to be very negative. So don't be alarmed if that's the case. That's just natural, sort of progression of the markets, reacting to political analysis. So you will be watching very closely. It's inside the Republicans. You have to be watching here for his tax plans. If there's some who are just not going to vote for it, if they come out the same Tea Party people and just say, no, this is, not what we want. Then you've got an issues, all right? And so, yeah, look, enjoy the rally. Just be aware that this is not just a one-way bet, this Trump tax plan. All right, now, if that was to be the case, that doesn't affect the Eurozone yields, though. And the US dollar will be sold. That's going to create an environment where the euro can rally quite sharply. Now, the euro can rally without that, just on its own ending of QE, ECB, changing its tone sort of feel. Remember when the US eventually got out of QE, there was a huge rally before the first rate hike, just in anticipation of it, 6 to 12 months beforehand. And that's the sort of thing that happens in the yield, in the bond market, and comes across to the FX market. You get the front running. And it's a story which has legs because it's a multi-month story. Why are we buying the euro? Oh, because the ECB is tapering. Are we still buying the euro on that? Yeah, that's why it's trending high. You know what I mean? Like, that'll be 6 months from now. It's enough of a story to start a trend. So that's why it's interesting to watch. And will it take the pound with it? That's a question. You'd think so, right? But who will it not take with it? Right? It doesn't take the Aussie with it. Right? It doesn't take the Aussie with it because the Aussie isn't increasing its interest rates until middle next year at the very least. If anything, we had benign inflation today. They could start to be an argument about cutting rates, which is the only sort of priced in chance this year that they might cut rates, because we've got a bit of a problem, with multi-sectors of our economy here. And so if it slows down here and inflation remains benign like it is, then there is the option to cut rates. Is probably a very high bar, though. It's not likely to happen. So that's doing nothing for a long time, sort of positioning for a central bank. It becomes like the Aussie becomes like the Bank of Japan. So any sort of moves by other central banks around the world towards increasing rates, like the pound's talking about it, UK's talking about it, ECB's talking about ending expansion. That's same as a form of tightening. Not buying bonds at record highs means that the bond market naturally falls off. So the yields naturally rally. That means the yields on the Aussie and the yields on the Kiwi are going to get yield compression. And that's going to lead to sharp sell-offs because the natural order in FX is dictated by movements in interest rates. Yes, this is why the big moves happen. And so if it looks like, these carry currencies like the Aussie and are going to lose sort of a place in the pecking order, then some of that natural support will be gone. And the general rule when the euro is rallying, everything's rallying against the US dollar will break down. Now you're starting to see that yesterday. When stock markets rally, and if you told me stock markets had rallied 200 points and that the euro had rallied 100 points, I would have bet a fairly big chunk that the Aussie would be higher. And the fact that it isn't is a big sort of clue. And if the Aussie is not doing well, You know, what's the other commodity currencies doing? You know, Kiwi dollar got crushed, just seemingly out of nowhere. It was looking all nice, just trendy, baby. Get crushed last night. The Canadian dollar, while it also has its own issues, is also getting crushed. Now, most of this being put down to weak oil and Trump's comments about Canadian timber and starting a bit of, you know, a trade dispute with Canada. Wouldn't call it a trade war yet, but it, you know, it's an opening salvo, right? Dairy was also on the agenda, I believe. This is terrible for the Canadian dollar. Canadian dollar is breaking out to fresh sort of trend levels, so new highs. Can definitely go higher here if that sort of rhetoric continues and that yield compression against the euro and the US dollar continue. That's a multi-month sort of trade. So, you know, how do we know this is happening, right? You look at the Euro Aussie and you can see it just punching higher. Yeah, now that's danger signs for the Aussie. Dangerous signs. So it's a bit technical. It's a not technical, trading technical. It's a bit like sort of advanced to some of the topics we're talking about here, but it's real. Yeah, you got to be aware of you know, don't be surprised if the euro gets to 115, 120 by the end of the year. You know, that's with the US doing what's doing. That's the US raising rates 2 times. You know, that's priced in. You'd have to be very aware that if something's priced in, it's no longer going to affect the market. It's not going to come as a surprise. What's not priced in is this European yields, which have started to move higher for no apparent reason, just basically people getting out of bonds. Now, that, you know, what can happen is the US doesn't raise rates 2 times this year, 2 more times. Or Trump's, you know, leadership comes under threat and he can't get his infrastructure plan, his Trump plan through, then the US dollar will be sold aggressively. And what's better way than buying the euro? I think it's even better than selling dollar yen at these levels. So buying the euro makes a lot of sense. Now, I suspect there will be some sort of progress with Trump. I don't think he'll be that incompetent and that weak. And I think there will be some sort of afterglow here from his Trump plan. So I don't mind long dollar yen, and I definitely don't mind long euros. So the best trade in the market is long euro yen. Long euro yen's getting a lot of support. So every time it has a dip, and it's had a dip right now, we'll be looking to be buying this pair. It's sort of got some big resistance, even like small trendline resistance. Get out of here. Small trendline resistance coming up here, but a multi sort of, okay, that will do. A multi-year downtrend is in play as well. Right now, a break above this 123, 124 level is definitely going to signal that we're going higher. And it makes sense. The trade is just the most it's fundamentally driven, and you know, technicals are starting to align with it. A break above 124 targets 130 to begin with, and we talked about on Monday the 144 as a potential as well. In you know, best case scenario, that's dollar yen 120, euro 120 by the end of the year. But 130 is still substantial profits if you get into a trend early. And it makes sense to you and you have conviction that you can buy on the dips, because it's pretty hard to buy on the dip at 127 after the market goes to 128. Yeah, so you have to believe in a trade and understand where we can go to and sort of trust the trend. If you don't, then it's very hard to trade pairs which move very quickly, like the euro yen or the pound yen, because your brain starts going recency bias. So it's like, hey, hold on a second. 1 month ago we were at 137. I don't want to get stuck here in a trade. I can get really killed. The market can reverse back, or it's time for profit taking. I'm not going to buy that anymore. It's gone too far. I mean, this pair has not gone too far, right? This pair hasn't gone nowhere. You know, we get to 160, we can talk about the pair's gone too far. We get to 140 on the euro yen, we can talk about the pair's gone too far. You know, we're just starting yet. We haven't even started yet. We haven't even broken downtrend. Yeah, longer term downtrend. So, time to get excited, boys. I mean, this is how you make money in FX. If you can get a big multi-month trend, and you can believe in it, and you can build up positions, that's not very easy, right, man? Let's put some caution into this sort of getting excited, because obviously that's a very attractive proposition I just gave you. All right, I had the exact same arguments and exact same talking at this on this rally here a couple of weeks ago. I was saying the exact same things. It's beginning. It's going to 130, 140. Time to get on. And then there was multiple reasons why the market reversed. But I would not have been able to see that move from 120 down to 115. Right, so you still need to use risk management, and the timing of any sort of change in trend is always a little harder to predict than right now. But given that French elections are passed, Eurozone risk is falling back, I think that it's more compelling right now than it was previous times, because we were trying to rally in February before the French elections. That was always maybe a little bit ambitious. Now we don't have too much political risk coming up in the Eurozone to get excited about to stop this. Yeah? So this time it really can get going. Alright, so I mean that's my opening rant. And I'm not just talking my book, even though I am long Euro Yen. I just really sort of believe in the longer term trade. I'm going to try my best to hold this trade for 1,000 pips, right? Just as almost its own little exercise in letting trades run, because it's not easy and it's something that needs practice. Yeah, my development as trade, I've been trading for 10 years. By the time I get to 20 years trading, I want this to be easy. I want to be able to see big moves, not just see them, but make money from them. All right, and so my own development as a trader is sort of what I'm practicing here. At some point, ECB is going to have to go from negative rates to positive. What pair is that going to affect the most? Japanese yields are kept low for 10 years. We'll play the Euro Yen. What's the big danger to this that no one can see? Bank of Japan. Yeah, so you got to talk about the, we just, the thing that we just did in this whole, talking about the trade is we dismissed Bank of Japan in 2 sentences. Oh, they're never doing anything. They're always 0%, because they've been 0% for over 10 years. But that's that's the blind spot, right? Where's your blind spot? All right, and also risk off is very negative. A stock market correction or downside in stocks or geopolitical risk hurts dollar yen. Doesn't hurt the euro. Euro USD could do fine in that environment, especially if it's weak US dollar, anti-Trump sort of movement. But it does hurt euro yen because dollar yen will be hit. All right, so there's the caution. Alright, let's but we worry about the downside when the downside's on. We worry about the top side when the market's rallying. Trying to understand the move and trying to be a part of it. So the Euro Yen has dropped back so far today. In the start of the European session, 70 points. I don't know if I'm ready to buy just yet. I'm keeping an eye here. It's not too bad. Yeah, if you're not in. But maybe a little bit lower just to make the risk reward better. I'll leave a little buy limit here. Alright, that's not a bad little setup. Just if you get filled, you get filled. If not, then you get to watch the market's reaction to Trump tomorrow. Have I exited my Euro trade? No. What Euro trade? Euro USD from way back. Yeah, yeah, no, a long time ago. Um, but yeah, buying euro makes sense. Sort of anywhere 108.50. You probably won't get into 108.50. You can buy now. You can buy now. It's fine. Look, if a Trump land somehow comes across perfectly, euro might go down to 108.50. I don't think it's going below 108 very easily. The bigger concern you'll have if you're buying euro right now is that the ECB, of course, is going to try and be dovish. Yeah, they can't let these yields start rallying before they're ready. So they'll be like, hey, everyone, will hold up. When that leaked source talking about us changing our words in June is it'll be actually very interesting. It'd be very interesting watching Draghi on Thursday night. I'm not sure who's streaming it here. Either me or Jason. Probably do the ECB live. See what he has to say. Right, now my plan is to let him talk it down, because he can't change the fundamentals. He can't change the whole game. He can just delay expectations again, like they did here, help the market pull back. But he can't change it. He can just delay it. And I think fool me once, shame on you. It won't fool me twice. Actually, that always paraphrases Bush's, right? I don't know. He says something. He says it wrong, but yeah, you won't fool me twice. So yeah, Draghi, can't avoid that the political risk is dissipating, and he can't avoid the eventual tapering question that has to be addressed, which the market will take as the beginning of the end. And the beginning of the end means that it's over. Euro's downside, relentless downside, is over. Alright, so Thursday should be fun. Today should be fun. We're going to have lots of opportunities. Looking to buy euro yen, looking to buy dollar yen, looking to buy euro dollar on dips. All those three are in play in the main way of playing it or today. Which one you play depends on how the Trump sort of tax plan is taken, and your sort of belief in whether Draghi can talk it down. Can you imagine if Draghi is fairly hands off tomorrow when it comes to sort of ECB monetary policy, and the market will be like, well, we've survived that. The euro longs would be, the euro shorts are praying for a Draghi miracle. Yeah, you can't be selling the euro very easily right now. Well, I don't think I know anyone who wants to sell the euro. I mean, not too many people are keen on buying it, and right now, like super keen and believe the whole story. They're worried about ECB and stuff, but that seems to be a speed bump. Yeah, like, oh, you want to buy euro? Oh, not before ECB. Okay, so post ECB, right? That's the sort of, we're talking Friday now, or we're talking tomorrow night after the ECB. What are we looking at? We're looking at the euro. Alright, guys. So yeah, the Aussie's been punished. It hasn't broken support yet. Now, if it does break support, we've got some huge downside. Huge downside. Has tempted and failed before, so I'm not in any hurry to play this pair. It's actually a pretty slow pair generally. We're talking about 300 pips over coming months, where Euro Yen's done 600 pips in 3 days. So pick your game, but that's not my game. Alright, quickly have a squizzy at some of the research out there. We'll read the early morning read from Jim Reed. So just check that we haven't missed any of the big macro things going on. I haven't read this yet today. You know, don't be upset if what we talked about today went over your head. You know that if you're new to the room and this was one of your first times you've listened to me, it's not like I go through and explain how bonds work every time. It's not like I go through and explain, you know, the relationship between all the pairs and what's moving them. But if you watch it over time, over coming months, you'll see the same stuff said again and again, and every now and again we go into what's going on, what that means. So you definitely pick it up. Hopefully we'll make a bit of money along the way as well to further justify the trading style. It's been really good 3 or 4 months though, just playing these stories and, you know, picking the right times. So it's day 97 for Trump, huh? So his first 100 days, nearly up. Today it's all about Mr. Trump's act. It's actually a huge day, right? You can probably mark this day in and go back to it in the future and say, yeah, that's when Trump lost all legitimacy, or that's when Trump's rally really kicked in. Alright, so even Jim is talking about the next point. Whatever we hear today still has to get through legislative approval, and there'll be a lot of talk about how tough that will be if it's not revenue neutral, and it's definitely not revenue neutral. So yeah, Trump pulled out of the demanding the wall be paid for in the next little government budget. So he's avoiding shutdown. Yeah, no, I'm not like a NASDAQ trader, right? So historically I didn't know how high it went. So literally it you know, had that huge rally back in the late 90s, and then they had the NASDAQ tech crunch. And it took 17 years to get back to it. Jesus. Alright, pretty light on detail this today. BOJ's actually this week as well. We briefly had a little chat about them. Probably going to get very little from them. So CPI did increase above the 2% level, which is the key level, but it was a little bit less than expected on most of the measures. So these guys are talking RBA moving in the first half of 2018. What will be interesting is to see what the RBA talks about with the housing prices over here again. and how they feel the sort of macroprudential measures that our some of the other government agencies are trying to put in place will, you know, sort of do the job for them, right? US yields are still ticking high here. Euro's just having a little peak below 109. If it moves down to 108.50, that's where I'll be happy to buy. Check your dailies there. Yeah, tomorrow probably we'll go through the ECB previews. I mean, it's a big day just because I want to be buying euro, right? It's probably not going to be the biggest. It's a non-live sort of event. No one's expecting any change in tone. But it is a big day in terms of we've got to get past it before we can aggressively buy the euro. And the risk are definitely skewed to the top side if they don't say enough to get the market selling or delaying its buying. That's what it is. It's not selling, it's delaying buying. And oh yeah, no. I mean, positionally, it's not that stretched at all. If anything, it's short. Yeah, the euro. But I'm just talking about my trader friends. So yeah, not everyone's long the euro yet. I think everyone wants to get long the euro. Yeah, and they're just worried about a couple of things like the tax plan from Trump and the ECB. But everyone who understands why yields are increasing over there, and you know the long game, I think of turning bullish. You know, when's the last time you read a report saying the euro's going below parity or testing parity? That's been taken off the table, right? Where the bears now. Okay, so we can even look at using the 108.35 200-day moving average on the euro as a buy point too, if we get that option. The dollar yen's way up, so it's too hard. Euro yen way above its 200 now as well, so we're never going to get back to that, or not easily. And so is pound yen. It's really kicking higher. So everything's in trend on mode there. Aussie's got some good selling levels if it gets back up towards it. Any bounce in the Aussie I think is good to sell. Traders are saying to me they want to sell up towards 76, but it's just, you know, how are you going to get there? Yeah, if Trump becomes ineffective, that's negative for the Aussie as well as stocks, because a lot of the plan is based upon him getting, you know, increasing commodity prices and global economy. So yeah, Aussie's got multiple pathways down and very limited pathways up. Nice little kick here by US futures. Dollar yen's responding a little bit, but pretty quiet all in all. Trump is talking 11:30 Eastern EST, which is so 1:30 EST. So he's speaking in 7 hours and 45 minutes. So 3:30 a.m. TradeAlerter. I work at 6 a.m. so I'll be reviewing and writing a little media sort of piece for that. I don't know if you want the market rallying so aggressively pre-game, right? There's how often does in FX do we buy the rumor and sell the fact? That has to be on your mind here if you're buying dollar yen or buying stocks. So we'll see how it plays out. 7.5 hours UK open. Alright guys, so yeah, hopefully you're all on board and up to date now. We will be talking about ECB more tomorrow and what could happen, what might happen. Unfortunately, like I said, it's probably going to be a dull affair and there might be nitpicking. Oh, he said that. Well, the ECB are pretty close. You know what I mean? Like, that's sort of change in language that'll be scrutinized because it's still so far away. But definitely, there'll be good questions to Draghi in question time. And he might address the rising Eurozone yields. Alright guys, trade safe, good luck.